Here you go. Apple Computer, 6:03 a.m. Pacific Standard Time. Date 10/5/2011. Topic is live pre-market hours right now with 27 minutes to the opening bell. MMTs have had their hourly morning management meeting. They have come to a conclusion of what today will bring. Just as that wonderful price action yesterday, buried in nothing but headline events with, what is it? The 17 people across the pond. There's 17 countries there. They need to come to a conclusion. At any time that they do, we would get net long because there would be a big short squeeze on what we call the knee-jerk emotional reaction. Let us go back to 10/4/2011. Today is 10/5, you know. And in that pre-market yesterday, it's live there on SMF. You could go back, and what we were talking about was increased price action volatility. And was there ever? Oh my goodness, and how wonderful that was. Because without that price volatility, how are you going to, when you make the market with the general public, you get paid very well where they really feel they want to own it. But then, at the same token, on the other side of that is that you're selling short and into those rallies. And so far, we've been selling short rallies now. We are in October. Okay. 2011. Let me tell you something. There, we came down and we hit that 1075 on the S&P, and we're acting real good. So the thing about it is, yesterday, those short squeezes got put on between that bull and that bear, and that's what the SMF MMT market maker is all about, is gauging that buyer and gauging that seller. And if there's more sellers, guess what I want? Well, I want to be short. Headline volatility will be running at full bore extreme. It is the middle of the week. The jobs report has come out. The data you have, the gap down list here and now. Google, $8.03, downgrade by Stifle. APKT, that's got to be related to some kind of headline on earnings, I would say. LUFK, look at these gap downs, and they got to be related to probably earnings. Apple and its new launch, well, they're not taking nice to it. Priceline, one of the best trading stocks out here. Here it is. The ranges yesterday hitting 411 and then coming back up and actually closing off of that 411 bottom at that 444. But let us not forget, MMTs, that it was a sell short down to that number. And as that print was going that way, you were doing the right thing. Right now, you got a 440 print. Look at the wide bid and ask, 433 by 440. Go find out what a delta is. You'll be amazed. Bid, ask, right now, Priceline will remain the featured stock as we have said it is. And as the economic cycle does change, well, are people going to Priceline.com and then buying all the things they need for travel? Or are they cutting back? Is the corporate world, CapEx spending, cutting back on their corporate travel? So it's one of the things that we'll be watching. Our short was featured at $549, and we have all the live videos on stockmarketfunding.com to prove it. They're time stamped. Yeah, yeah, right along with all of them again. Because one thing about these right now, the Chinese government is looking at all ADR listings on Chinese regulated stocks in the United States exchange model. Watch for the shorts as they go up. But this one too had great volatility off the bottoms yesterday in price action. Always will. So once again, the Amazon, here's another Chinese ADR, Sina. Okay, it had its own volatility. Fritz has been on that one. Got back up to the 72.67 handle. On an Amazon, wow, think of that. 212.50. So Amazon will be a featured short up at the top this morning. And we have exactly 22 minutes to the opening bell. So as we approach the opening bell, the buyer and the seller is going to have a public reaction. And the MMT market maker, who makes the price between the buyers, wherever they come from, and the sellers, wherever they come from. Right now, the market is going to fight for a calendar year low in the S&P yesterday. Our target was down there around that 1075 area, and we talked about that a month ago, of where the S&P was going to have to get down there. And we trained our MMTs specifically around this subject. Could have been a couple months ago. But nonetheless, when we were first putting in that first yearly low again, bottom, calendar year low bottom, is that we have come down there, and there was a lot of people at that price level that was buying to cover, the short sellers were, and then there was natural buyers as well. So basically the contagion factor is still in play. And at any moment there could be a headline where this market could totally reverse in price volatility. You would want to be long for as long as the buyer wants to own it. But then when they want to sell it, you'll be coming out and getting short and going down when there's no more buyers there. Okay? And so the gap open down list in pre-market trade management is to come in, watch the wind. It had a great ranges. You got your price lines. You got your apples. Apples made a great move around that 355 handle. Boy, and they took the option pricing down, stole all that premium. And here is a recap right now of all the premiums right here. Look at Google's at 493, and look at people were chasing the 490 call. The last print was 1630. Wow, what a retail public buyer. Watch that one on the open. That's a 10-7 contract, by the way. Not to mention that 495 call. That's a 10-7. The last print was 1290 right here. And that means that they're going to lose all that value. And that means that these put right over here, that $500 put, went up to $21 yesterday and came all the way down. Last print, $750. And that's where you were supposed to be buying MMTs. Why? Because you were getting them wholesale. You're like almost $12.50 cheaper than the intraday high. You taking out all that risk to be in that $500 put. Dollar cost entry capital risk was addressed most definitely in the price action. Welcome to the world of increased volatility. Not only that, welcome to the world of that buy-sell transaction and that sell-side transaction, because you're going to get net weighted right there, and they're going to be taking extreme amounts of premium out. But every time we continue to go higher up in the channel, and when the puts are at this price, they need to be transacted. And on the opening bell, this last value of 750 is going to go up, and the values over here and the calls are going to go down. And we got the Apple call. I mean, people chase that at 820. Look at it. It's at 370. And it went back to 372.50 close. Oh, my goodness. But what is it? The 385 put got cheap. It was $30. And the last print was $14.90. You're buying it 100% below the market. You're taking out the capital risk in the entry within the price volatility at those prices. Look at the 380 put, 1185 last print, but look at the high yesterday, 26.55. Closed at $12. What a nice move. I couldn't ask for anything more than that. But then when it got up there, the calls got cheap and they ripped off the bottom. And that's where, at that point in time, that you were making a market.